You are moving through the late morning session here on Wall Street, and markets are in that classic push and pull between excitement over AI and a little renewed anxiety over the Federal Reserve. I'm Grant Mercer, and this is Storm Stock Solutions, where we bring clarity through the chaos of the markets. Since the last hour, the macro story has sharpened. According to reporting from MarketWatch, two Federal Reserve officials who dissented from the latest interest rate cut are out explaining their vote. Chicago Fed President Austin Goolsbee is saying, in essence, inflation remains too high, and that the Fed might have been better off waiting for delayed data on prices and jobs before cutting. That kind of rhetoric doesn't undo the cut we just got, but it does pour a bit of cold water on the idea of an easy, one-way path to lower rates in 2026. Traders are going to hear that and immediately rerun the playbook on rate-sensitive pockets, financials, small caps, and the more speculative corners of tech. At the same time, the AI narrative refuses to step out of the spotlight. MarketWatch highlights a fresh note from J.P. Morgan, arguing that Alphabet and Amazon could be among the best-positioned AI names next year, as corporate spending on AI ramps up. The argument there is about real return on investment, cloud, advertising, and e-commerce all getting a lift from AI workloads, not just AI as a buzzword. That's helping keep the mega-cap trade in play, even as people worry about how far this AI rally has already run. And speaking of that worry, one of the most talked about stories right now is almost more psychological than fundamental. Time magazine, naming its 2025 Person of the Year from the AI world, has investors joking and half worried about the so-called magazine cover curse. According to Joseph Adinolfi's piece at MarketWatch, there's chatter that a big glossy cover could mark peak AI enthusiasm. You're seeing that show up both ways. On one side, traders leaning into momentum in the AI leaders. On the other, a sense that this is an area to handle with care because sentiment is so stretched. It's rare that the same story is both a driver of strength and a potential risk, but that's exactly where AI sits right now. In the background, there's another macro thread that could matter more to semiconductors and geopolitics as the day wears on. A MarketWatch opinion piece argues the US should get tougher on technology and reconsider NVIDIA-style chip deals with China. The idea of a chip-for-chip tariff as a national security and revenue tool would, if it ever gained traction, be a big deal for the whole semiconductor supply chain. For now, it's more thought exercise than policy, but professionals in the chip space watch these arguments closely because they can foreshadow real trade measures down the road. On the sleeper front, I'm keeping an eye on a few under-the-radar stories that could matter more if conditions line up. One is Orbital AI. A MarketWatch piece notes Jeff Bezos and Elon Musk targeting AI through space infrastructure, with the suggestion that the edge for investors is figuring out where that capital flows first. Satellite operators, space launch operators, space launch providers, or ground-based data networks tied into those constellations. It's still more thematic than tactical right now, but it's an area I'm watching in the background as AI pushes beyond just data centers. Another name on the radar, Fairness Project Matador, a massive power project associated with the Trump brand. MarketWatch reports its first potential tenant just backed out of a $150 million funding agreement. One deal falling through doesn't kill a project of that scale, but it does raise questions about financing conditions for big politically exposed infrastructure and energy plays. If funding gets harder to secure, markets may demand clearer economics and less headline risk. From here into the next hour, I'll be watching whether that Fed dissent story gains traction in bond yields and rate expectations, and whether AI remains a buy-the-dip theme or starts to show fatigue as the magazine cover narrative circulates. If we see a move in semis or the big cloud names, it will probably tie back to these evolving Fed and AI headlines. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.